I want to take a look at StarBucks right now. As you can see, it gapped up today, and with the market as it moved up, finished a kind of indecision type candle here. We do have stacked EMAs here. We've got the 200, the 50, the 30, the 20, and the 10. But what I'm looking at is a possible counter trend trade right here. Something that I like to trade from time to time. It's not part of a necessarily swing trading type strategy. Like I said, it's a counter trend strategy against the overall trend. We have a weekly trend here that's going up. We have, a daily trend right here where it's going up. Then I have two weekly trends that I've put in here where you can see where they're at and where you have support and resistance at. And what I'm looking at today, and is this trade I haven't shown yet on the channel, is I've got to move above this 2 Keltner channel right here on StarBucks. My expectation is that it's going to come back down closer to this wave, closer to this trend line at some point in the very near future, as opposed to continuing to spike up. I would like to see a little bit higher RSI here, but this still isn't too bad. It's heading into the 70 range, so that, it's getting up higher like it was back in here after it had gaps up. Of course, that was after earnings, but I do think there's still a potential of a low risk trade right here, playing it to consolidate or to move back down. Now let's take a look at the Bollinger Bands. You see the same thing. We've hit a 3 ATR. We hit a 3 ATR right here and it immediately pulled back. We don't hit 3 TRs very often, but when we do hit the 3 ATR or the 3 deviation away, you can tell we typically get a pullback. This was a little bit of an exception. We got a consolidation here, but it did move higher. So we had an exception to that right here. Right here it hit it, consolidated for about a week, moved up slightly. Really what I'm looking for is just a week's worth of consolidation with the trade I want to talk about today. And what I want to do is I've got it trading at 88.21. What I want to do is place a put calendar. It's a very low risk trade. Now, granted, the negative to the calendar is that even if you put the put down here lower and it moves down, if it moves too far down, you could still lose money. What you really wanted to do is to kind of trade within a range when you're placing a calendar trade. I really like calendars. I like to trade them a lot. I have pretty good success with them overall. My overall win rate is probably not as high as some of the others, but I do make money over the longer term placing calendars, especially if you put them in the right spots, like I think we have right here in StarBucks. So what I'd be looking at is pull up the actual trades. I went ahead and pulled this up, an 88 put calendar. If you just did one contract, it would cost you about $110 to place this trade. And what you're going to try to get out of it if you did decide you wanted to place this trade is you want to try to make around 25 to 30%. So if we got into it at $1.10, then I would want to try to close it probably around 85 cents roughly. So you're not trying to make a huge amount. All you want is a little consolidation or a little move down. So if you were doing the next week, if you're shorting next week's December 88 put, and you're going to buy the 24 88 put to cover it, you can get it for $1.10. We can go down a little further, and let's see what it would look like if we bought the 87.50 calendar. So if we went for the 87.50, let's take this back out to the 24th. We could get it for $1.09. And, really I would be good with the 87.50 or the 88. If it was a small account trade, I would probably do, depending on how small your account is, I would probably do 2 or 3 of these. Probably at least 2. If you're new to calendars, don't understand them a lot, I would do 1. And I would use kind of the same strategy I would use if I was going long or short. So if I place this trade right here, let's say I place the 87.50 for $1.09. I'm going to try to close it. If I place it for $1.09, I'm going to try to close it for about 85 cents. Let's see. That's kind of what I would like to try to get out of it, if at all possible. So between 80 and 85 cents is where you're going to want to try to close it. If you're trying to get 25% of it, you want to close it. If you got $1.09, you want to close it at about 80 cents. So I might shoot for the 80 to 85 range is where I would be. However, I would place it tomorrow, depending on what this looks like tomorrow. Now, if it opens way down here tomorrow, then I wouldn't place this trade. If it opens way up here tomorrow, I wouldn't place this trade. I would place it probably sometime after lunch tomorrow, provided that Starbucks was still trading within this candle. That's when, to me, this would be a valid trade. And then what I would do if I went ahead and did this at the 87.50, I bought the 87.50 put calendar. I would close it next week if it traded above this candle. I would just close it and take my loss, or if I had a small gain, I would take a small gain on it, whatever I had. But I would close it if it went above this candle. If it goes down, I would keep it. And what I would typically do if it goes down, let's say it finishes at 86, and depending on implied volatility, you may or be able to get out at break even, or you may be able to roll this 20.8750 put to the next week, the 27.87 put, which is another advantage of having multiple weeks in here instead of just doing a 1 week calendar. Like if I try to do it like this, this is a lot cheaper, but I've got to be right if I do this one. Now I can get this one for 22 cents, but I've got to be right. And sometimes you will see me place these, but typically I like to have a couple more weeks left in them. You could look at the 17 January if you wanted to, because it's 90 cents, or the 24 for $1.09. Any of those. The goal here is to try to make 25% on this. So again, if you paid $1 for it, you want to try to close it for 75 cents. We're paying $1.09 if we do this one, so we want to try to close it, for about 80, 85 cents, try to make a profit on it. And that's how I would trade Starbucks, just because I do expect either a consolidation or a pullback. And I'm fine if it consolidates, say, through Wednesday of next week, and then it moves up slightly. I still may be able to get my close right here because I have a longer term left on that 87.50. So long than I do on the short that's down here. So I'm okay as long as I get a couple of days of consolidation by Wednesday of next week. As long as it's not trading above this should be a profitable trade. Just something to look at. I'll probably introduce some more calendars to you as we go along. If you have any questions, please let me know. If you have any comments, put them down below, and please subscribe to the channel. Thanks.